Everybody, morning as usual. Good morning. And how's it going? How's it going? Everybody doing all right? AMD. Well, talked about it needing a pullback for a while and pulling back a little bit. Pulling back. ES and Q. Coming back up a little bit. So we had turnaround Tuesday. Now we have turnaround for the turnaround Wednesday, maybe? I don't know. We'll see. We'll see. The market typically doesn't bottom on a Friday, but maybe that correction was complete for now, and we're gonna take a little longer to do the next leg. We'll kind of see. I saw an online betting site. Will GPT-5 be released? Anyway, I brought a few things to talk. If I can get my charts to be on the right tabs. On a new tab. Yes. Open a new tab. Yes. I thought I had this done. Sorry. Open a new tab. Yes. Open a new tab. Yes. All right. And one more. There we go. I think I got them all. So, oldest asset in the land, as the title and everything suggests. Guess what? Real estate is the oldest thing you can invest in, right? And look at this. Average farm real estate value in the United States, dollars per acre. This thing, $4,350. $4,350 per acre. Thing keeps climbing. Now, average cropland value. This is key distinction here. This is, real estate value. This is cropland value. 58.30. Why do food prices keep going up? Value of the cropland keeps going up. So this real estate bubble problem thing spills over into food prices. And so it's like a self-fulfilling mechanism driver inside our economy. And we can look at, real estate value by state, farm real estate value. It's quite expensive over in here to do farming. Down here, out here. We grow a lot of stuff here. It's expensive. Getting more expensive in here. And then cropland value, dollars per acre, percent change. This is where things are going higher. Like the bigger increases in the dark red states, smaller increases, and it's basically all going up. So crazy changes. See in Tennessee, Kentucky, quite the increases right there. And the last chart I brought, pasture value. So if you got value, if you got pasture land, it's quite high right in here to grow pasture critters. Cheaper out here, but not so much pasture in the dry area of the country. So anyway, big changes keep climbing. This trickles down into food costs. You wonder why food keeps creeping up? Well, there you go. Can't keep this under control. It almost every year it goes up. Little blip right there, 2015, 16. Coming off the back of the great financial crisis, this thing just keeps climbing. And we got big people like Bill Gates buying up large chunks of cropland and then leasing it out. And I mean, hey, we could talk all day about the kind of crooked stuff going on out here, but when you have billions of dollars, where do you put it? And some people are like, oh, well, they don't need billions of dollars. We'll just take it away. Like, all right, so whatever motivates anybody to do good. You look at what Elon's done with his billions of dollars. He starts new technology companies and makes more billions of dollars. But somebody like Bill Gates, he just invests it in stuff and doesn't really, he like buys farmland and doesn't really make substantial changes to our society. I mean, he tinkers with stuff. Like, it's just like a misguided, I don't know. It's almost like a misguidedness. But who's to say where you put your money in? And I don't think we should have any control over anybody doing anything with their money. But beside the point. So, how much food do we import and export? That's a whole different conversation. Because we bring in a lot of things that we don't grow here, and then we export things we do grow here. And whole different case. I mean, I could talk about that in a future episode. I didn't bring that kind of data with me today. But my channel members like Don, Will, Hugh, Rob, Craig, Scott, David, Don, Diane, Arturo, Sergio, Svenborn, Craig, Frank, Dan, Sledge, Pauline, Ted, Rungemer, Mary, Mark, B, and I see my favorite subscriber of all time, Kimberly, in the chat there. Skaggs, Jason, Darren, Rob, good to have everybody. And I see the general up in there. Good to see you, sir. And welcome. All my subscribers like Ted and Diana, Jim, Jan, Tara, Alan. Good to see everybody. Francois, Larry. So, earnings, like, we don't really have any major news items this week as far as economic news goes. And all trading involves a substantial risk of loss, past performance, not necessarily indicative of future results. Just because I say things or predict things, it doesn't mean they'll come true. I get things wrong plenty enough. Sometimes I get lucky. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instruments, including stocks, options, bonds, forex, futures, cryptos, treasuries. Don't trade stuff because you might lose money. Make sure you have a plan. Make sure, and if you need somebody to tell you what buttons to hit to make money, you got to hire and consult a financial advisor, but mixed results there. Make sure you trust whoever it is you hire to do anything for you, even if it's a guru like me, and you want them to help you learn how to trade. I'm not going to tell you what to do. You got to figure that out for yourself, because everybody has their own personality. It's all different. Like how we identify with money is all different for every one of us. I look at it as a tool. I see the best traders not emotionally attached to money. We see it as a tool to make, to gain more money. Now, the people you owe money to, they sure as heck want their money, but what good does money do for you? Like it, as far as it's a tool, but if you have money, does it make you happy? No. Does it buy you food? Sure, but that's people wanting things. So money itself doesn't do much for you. It allows you to do good things for other people. That's kind of the way I look at it, but it's a tool. It's not really happiness. So be careful. It's cuts both ways though, because money obviously in the hands of people buying farmland keep pushing everything higher. Food, kind of the bottom tier. Everybody has to have food. Like it's a basic necessity, basic resource. We all have to have food. I've yet to meet people that don't eat at all, ever. I mean, maybe there's somebody out there that doesn't have to have food, but I've yet to meet them. So what goes in the bottom trickles through the top. As the bottom input resource gets more expensive, everything higher has to get more expensive. That's kind of like inflation 101 right there. As the bottom things get more expensive, everything higher has to get more expensive, you know. All right. ES overnight. Looky. So there's a real risk. I warn, I caution. As long as we're below this level, there's a risk for this. This being the first move down, and that being the second move down. 1, 2. Was this enough to be the correction? It hit the 618. Check plus. We're good. Move down, retrace. Let's dive in a little closer. So potential 1, 2, 3, 4, 5 down. Retrace, not really clear. Not much to the subwaves. Running the fib lines on it. Excuse me, golly. Orange Monster always gets me. Running the fib lines on it. 618. Right there. So it came down, did not hit a 618 on this first move down. In case you're like, well, I don't understand. So this first move down came up shy of my reversal zone for a measured bounce. So probably not likely to take another swing higher and this be a corrective. So this is probably all done right here. First move down, second move. We may see downside pressure today is what this is telling me. Next move down. Potentially push us right down here. Then we got a bounce. Probably somewhere up in here. And then we push on down. Wrap this baby up. Potentially push down. First move down, second move down. If we do that, just throwing this out here. First move down. Second move down. So we can see this come down. Into this vicinity right there. Maybe even push it just a little lower. Right there. So now that we have these levels in mind, 6,100, probably an extreme. If we get a push down, that's about 200 points, 240 points off the high. So we could take this. We've been doing this the last few mornings. Every one of them's worked out so far. Roll out to the expiration today. Jump down here. Oh, down is down. Opposite every platform I trade on. 6,100. Now, no credit there. Jump out to tomorrow. There we go. Add a little extra room. Down to about 60-40. Sell one of those babies for like 30 cents. Make some money. Just parking cash right there. This is S&P 500 futures. Could you do it on the index? Sure, you could. It's going to probably cost you a lot more margin. The margin on futures is relatively low depending on where you trade. So, that would be, oh, look, those ramped up. If you wait for a drop, maybe you could get even further down here. Get down around 6,000. Probably even better. Shit, that's a wasp. I don't know where that sucker came from. We're going to have to take care of that here. So if I get stung, I apologize, but there's a wasp in here. Nice red wasp. At least it's not. Now, I've lived here in Knoxville my entire life, and red wasps, very common. Like, they're like kind of like mud color, orange, red, and very common. They don't tend to bother you unless you mess with their nest or, something like that. The last few years, there's been these yellow and black ones. They look like they're same shape and everything as the red ones, but they're yellow and black, striped all over. They'll come get you, like if you just get near their nest. And I don't know, like I've started seeing them all over town. I don't know where they came from. I'd never seen them all my life till probably the last 15 years or so. Anyway, kind of crazy. So I keep an eye out for those because they make nests outside my office here. But I don't know where that one went. He was up. He would flip on the light there a second ago. Now I'm like looking at the lights. I'm like, I don't see him. I got super bright lights in my studio here. All right, back to what we're talking about. Lots of fib lines on the chart. Just clear it off. Potential for that drop. That's what I see right now. Yeah, I mean, Rongamer's here in town too. It's kind of crazy. Kind of crazy. Dun, dun, dun. When the wasp turns out the light. Yeah. So we'll see what it does. Now, another potential 5 down on NQ. This one didn't hit the 618. Kind of interesting. And we have a nested kind of 1, 2, 3. So this one, like, we have some upside potential here on NASDAQ. Before we take another move down, that would put it in that 618 zone right there. So NASDAQ might be indicating we get some upside before we get more downside in the market. Why do I look at both of these? For divergences. Divergences mean that they are doing different things. Like ES has a more immediately bearish pattern, and Q seems to have a more bullish pattern immediately. At least for going up here. Both of them, major resistance and potential for more downside. That's what I see. And Russell, look at this. Diving out. We don't see that. Like, here, we're messing around under the 15-minute. Here, messing around under the 15-minute. Russell was actually doing some kind of bullish stuff into the wee hours of the morning, but then taking a spill here this morning. Actually sitting kind of more bullish, but if this breaks down, it's actually more bearish because of the big picture pattern that we've got in place sitting here in Russell. Big picture. We moved down. We've retraced to a 618. We moved down, hit the daily roadmap line, moved up to the 618. 1, 2, 1, 2, 3, 4, 5, 1, 2. This is nesting up a potentially bearish, very bearish drop out. When we get to the 3 of the 3, this is going to be pretty vicious, probably. I would expect another wave 1 down, another wave 2, before we get the part of the 3 of the 3 that takes us on down. CL, come on, just drop out already. Just push through. Setting up this little, if we get another bounce right here, We do that in the next couple of days. Should be good for at least a move like this. And then we'll probably get continuation. Now, you could look at it and be like, well, there's a shoulder, a head, a shoulder, a shoulder. Wait a minute. So shoulder, head, shoulder, shoulder. That's not really a pattern. So see what happens. I mean, maybe it's possible that all of this is part of a head and shoulders reversal thing. I don't know. Put that all the way up here. Put this down here. Put this over here. Yeah, see, it's like, it's all, like, did we break the neckline and then we just back tested it? Like, if that's the neckline, did we just back test it and then we're about to wet the bed? Fall out of the bed, however you want to say it. Take us down to 55, which is, oddly enough, that's just down to those prior lows right there. I don't know. It's no strength. Either any way you cut it. Any way you cut this mustard, there's no strength there. Rejecting the breakouts, but finding support. This is obviously this low from back here in 2023. That's where this zone comes from right here. It's obviously important for the price of oil for whatever reason. If we get below it, that's probably where probably down to 50. I mean, we could stop at like 52, 53, but probably down to 50. That would be what I expect. But how long is it going to take? Like, that's the big question. Gold taking a little bit of bath today. Remember, this is a lower high. Everybody's getting super excited. I've seen so many articles on gold's about to rip again. This is lower highs all the way across here. If we turn down, the downside can be vicious. And silver took a spill off of its highs. Retracing, we may find resistance right there at the 618 and take that next move down. First move down, second move, ABC correction. Absolutely beautiful. Hey, if you're brand new here on the channel, click the button over there, my logo. Be a subscriber on the channel. That way you can chat with everybody. Say, hey, good morning. And I'm going to take a minute and teach you the two basic patterns I look for so that this makes more sense right here. Pattern number one. Now, the orange line I have, it's called the roadmap line. You can go back to the channel homepage after we're done here. Watch the video on that. I give the code, all that stuff. I have an easy button link in the description if you just want to pay $5 and not worry about doing code yourself or anything like that. So we're looking for a couple things here. Now, price tends to find support and resistance on my roadmap line. Now, what I'm looking for is a pattern that goes in a trend. And let's actually use the lines that don't disappear. We have a trend and we break through. Like, we made a bottom, we come up through, right? The price was coming down in a trend. We made a bottom somewhere over here. Price comes up. Cool. Now we're looking for price to come back and retrace, find support somewhere in the vicinity of that roadmap line. Sometimes it goes below, sometimes it just touches right in. If it comes up short, it doesn't really count for that time frame. All right. This works on all time frames. It's fractal in nature. It's self-similar and it works. All right. Now, when we see this pattern where price has ended a downtrend, come up, retraced, we might see the roadmap line reversing higher. I mean, it could also be that the roadmap line was just like this, and we just happen to come down and dip through it. It'd be, we wouldn't see the future. We'd only see up to that point. But come down in it, and then we do some sort of reversal. All right. So it can be kind of either way. Not so important how the roadmap line looks. I've tried to put numbers to it. It doesn't seem to matter much. Now, we grab this fib tool, which is a 2-point tool right over here, third icon down. Hit the top, hit the bottom. Whatever the move is, the highest high here, the lowest low here, we hit those with the 2-point fib tool. We run this fib line. Now, I use this zone between the blue uprights, and I really like that pink line right there. That's kind of a reversal zone. And we'll talk more about this pattern here in a second. When price comes up off that low, we're looking for it to get above that pink line. Once we get a close, a candle close of whatever time frame we're on, above that pink line, it's game on for this trade right here. High probability, 75% of the time, price will make that move right there. 70% of the time, we get up to that next fib line right there, that green line. So extra little juice, 70% of the time. That's 5% less, all right? I like 75% more than I like 70%. So the trade, enter here on a close above. Don't front run it. Don't, if we get a big spike and by the end of the day you're down here, don't take that trade, all right? Need price action above this, above the pink line. Looking for that move. That's the high probability trade. Now you'd be like, all right, does this work to the downside? And the answer is yes. So if, say, this thing was the other way and we were trending up and then we got to move down and went like this, this thing's probably going to be more like this. And we bounce right here. Let's pull that up just a little bit more. You can run that fib line. Low to high, because we're upside down. When price comes down through this level, you see me talking about this all the time, that I want price to hold in there. We talked about on a variety of things already. We might get the extension right down here. 70% of the time, or 75% of the time. I don't have big stats on the downside because markets don't go down most of the time. Look at the last 120 years of the S&P 500. Almost every year it's up. On average, it's up like 8-9% a year, depending on how you do your percentages. So typically, I'm going with the market, not betting against it. But this is one to keep an eye out for because it shows up a lot. There's that wasp coming back through again. So now the other pattern. This is pattern number one. This is called the market roadmap pattern. All right. It's my roadmap line, market roadmap bounce. I look for these all the time. Kind of tells you where price is going and how far it's probably going to go. Now, there's another pattern. And it doesn't involve the roadmap line. What this one involves, you have a trend. Trend's down. We're going from the top left of the chart to the bottom right of the chart. In some way, somehow, with price action, it's a downtrend. Now, we make a move up. All right, that looks like it might be a reversal. There's things we can do to try to figure out if that's going to be a good one or not. We don't really care at this moment. And then we get a pullback. All right. Now, this is where I was already working on the S&P. Like, I didn't really care about the roadmap line so much. But we're looking at this. And when this pullback right here hits that 618 in Q, right? NASDAQ was what we were looking at. A lot of times, we'll get a move that copies this move off of that move. We'll do this. And I call it an A, absolutely beautiful correction. All right. 3-wave move, when they're exactly proportional, it's an A equals C type move. This is Elliott wave stuff. Gets in the weeds. You don't really need to know it to see this pattern. Now, first move, second move, use the 3-point tool. That's what I just did. 3-point clicks. How do you find it? It's right over here, down here. Trend-based fib extension tool. I use these two tools. 2-point tool, 3-point tool. Has 2 dots on it, 3 dots on it. Those are the two I use all the time. Now, this extension, ABC, if we're bearish, and this is actually a correction, here's the 2 fib lines that matter. The 100, which is the A equals the C. That's that first move and that move. Those two equal to each other. That's the red line. If we get an extension, 1272, remember that 70% of the time thing from the other pattern? Well, kind of plays out here too a little bit. A lot of times we'll see this come up in this zone right here and then reverse back into trend. So after this completes and it's bearish, if we stop in this zone right here, the original path is down, we get resumption of the trend. Now, funny enough, a lot of times that roadmap line comes in right here, and you can run that bigger fib line right up to here, and that roadmap line will be hanging out like this. Get that bounce off of there, and then we can figure out if we're going to go bearish by watching the 618 and getting the downside to a lower low. Combining patterns, right? Now, this works on the other side too. So, clear all these off. If the trend is up, we get a pullback. This is more like what I was talking about on ES. We get that retrace right there. Run the 2-point tool from the high to the low. There's our 618 zone right there. A down, trend is up. So correction goes against the trend. That's the A, there's the B. And we're looking for it to be in the uprights here. That's the most probable spot for it to reverse. Most favorite spot to reverse is off the 618. And then C, it's continuation to match the A. Same thing, same 1-point, 2-point, 3-point. We would expect this to get continuation right down in that zone. If it can hold there, possibly we resume the trend. The trend was up. And we resume the trend and go higher again. All right, that's the 2 patterns. These 2 patterns, I find them very reliable. Now, you can spend a lot of time learning Elliott wave and digging in and trying to figure out the twists and the turns and what's the this and the that and the A of the B of the C of the 3 of the 2 of the whatever. It doesn't really make you any money to do all that, right? These 2 patterns can make you money, and it's how I predict all these price action moves all the time. So these 2 patterns I go through every single day, looking on every single chart. There's some other nuanced little things that I pick up and pull in. If I had just known these 2 patterns, I would have made a lot more money a lot faster. All right. So when we're looking at silver right here, what do you see? You see trend coming up. All right. That's the trend. It's a lot sloppier in real life. That's why I drew it with lines. We see trend coming up. We see a retrace. So this is, and in fact, if you switch it to a line chart, look, we're kind of getting closer to, you see trend coming up. You see the retrace. It's sloppier in real life, like I said. See the retrace coming up. 618. A. B. C. Right down there in the proportions. That's why that zone for silver. Now, real life's messy. Doesn't always follow the patterns perfectly. This could come up shy. could come out up here, overperform. You know, we get sloppy price action. So be careful out there. All right. Nothing's perfect. Under ideal conditions, we'll find resistance right here and we'll turn down and find support right down here. Give you an opportunity to buy something like AGQ, leverage silver for the long term for the potential pop out to new all-time highs, which when we look at silver on a big picture time frame, it's going to be way on up here. And we have these big picture, you know, like we did that big move up, retrace to a 618, potential to get continuation right up in here. That'd be 200. That'd be nuts. Absolute nuts. All right. Giant upside potential in silver. Gold being sloppy here. So be careful. If silver corrects, gold probably go with it. Being sloppy. So Bitcoin. Now this one gets in the weeds a little bit here. A little bit in the weeds. I have to admit, like, things are a little bit sloppy here. I kind of expect this to dip one more time. Now, maybe like, whoa. New letters. Yeah. Because of the structure of this, it doesn't look like an absolutely beautiful correction. It looks more like a WXY, which is just getting into the Elliott wave stuff. But here we have a 1, 2, 3, 4, and we're probably going to do a fifth wave down to a new low as long as we stay under 116,000. This Y needs one more go, and that's probably what we're going to get. Price action's being a little sloppy off that high, but we might even see it dip a little further down in here. 109. And it may possibly, talked about this for a while, it's possible we come back and retest the downtrend of highs that we had cooking right here throughout the summer. We broke out. We might need to come back and back test that right there. Might need to come all the way back down here in 105, 106 area. That's entirely possible because look where the roadmap line is hanging. On the daily chart. We might need to do a roadmap line bounce before we can get further price action. At roadmap line, support resistance. Why? Algorithms. That's my easiest explanation. Humans make algorithms. Algorithms trade the markets. They respect these lines. They're based on Fibonacci. It's very simple, though. Just a couple EMAs. Ethereum, first move down, retrace. This, even though I've got tons of lines on here, check this out. Here's the high. Here's the low. Look where we turned down. Stuff isn't magic. Continuation. ABC. Absolutely. Trend was up, right? Trend up. Correction. Absolutely beautiful. Correction. The proportions we're looking for. First move down. The retrace. Next move down. Target right there. Right there. Yes, sir. Back down to 3,000, 3,100. Somewhere in that zone. Not difficult. Same patterns. This one. First move down, second move, third move. Have to see it on. Oop. Need to go to a 4 hour. First move down off the high. Correction. A. B. Absolutely beautiful. Ooh, correction came out right on them, right there. Now we get And 4-hour roadmap line right there. So we're looking for, what are we looking for? Confirm this might be done. Here's the high, here's the low. We need a break back above that 618. And that's right where this high is. Confluence of things. Break above that high and that 618, probably going on up. That 1448 sitting right there at the all-time high from July of last summer. If we break through that, odds are we're going on higher. I use this as an indication of global liquidity. Global liquidity going higher drives most prices higher. Now, the downside here, that's not breaking higher. That's a little bump, and we could go deeper. So the downside, there's always a downside potential. There's an upside potential. The market can just take a crazy, left turn at Albuquerque and do a different thing. So anything's possible. We're looking for what's most probable. I go with these patterns over as the most probable. Remember I talked about 75% of the time? I drew that really sloppy. 75% of the time, we come up here. But what's that leave? It leaves 25% of the time. We're going to do something different. So that's still very possible. Happens 25% of the time. We go the other way. I'm all about probability, high probability pattern. A lot of people talk about a high probability pattern and they don't show you one. I showed you two. They're relatively high probability. Now, the reversal thing, I actually call that a measured bounce. Corrective, ABC, absolutely beautiful correction. It doesn't have a high probability thing to it. It's not a high probability trade, so I don't typically trade them. I just watch for them to complete, and then I hunt for a high probability trade. So the most beautiful thing is when you combine the two things together. Combine those two things together. Let's jump up here. See if we got it. See this right here? Combine the two things together. Here's the roadmap line on a 30-minute chart. A, B, C. This now reverses back below. That's a roadmap line bounce from with an ABC. Roadmap line bounce from below. Continuation down lower. It's fascinating to me how these patterns work together. Which time frame should you be on? Depends on what you're looking for. You can find these things on the 1 minute. They play out very fast. You can find them on the big picture. Now, Apple, I've been talking for, we may not get to everything. Been talking for 45 minutes now. Apple, nice little pop. On the daily chart though, just grinding. Grinding. This is doing a potential 618 retrace. Watch out for the next leg down. First move, second move. Now, here's where it gets really interesting. Trend moves tend to happen in five moves. All right. Corrections tend to happen in threes. So you got to have 3 to get 5, right? So that 3-wave move happens no matter if you're in a trend or you're in a correction. That's why I only focused on that. But if we're going to start a new trend, add a little more to it here. Instead of stopping right here, we tend to come on down to here. So if this next move comes down here, we'll probably do another correction, hold below, and get another extension and make that 1, 2, 3, 4, and a 5. Now what gets really interesting is the fact that in that 3-wave move, that ABC, the C always has to have 5 waves. So if we have this being the A, this being the B, And we get a 1, 2, 3, 4, 5. That gets a little extra spicy on the downside. That turns out to be our ABC correction. Possibly down to here. Maybe with the proportions we've got cooking right now, we just stop right at a slightly lower low. Double bottom, some people say. We'll see. Kind of bearish on Apple right now. That's why I have my hedge trade out to December. Amazon, back to that roadmap line. If we can hold it, we touch it, hold it. We can bounce here, go higher. If we break below it, starts being up in the odds that that's an A. This is a really deep B that went above the upright. And we could get the C that maybe comes back down for a double bottom. Google, very similar to Amazon here. We broke above that upright. We have this gap down though. That's big resistance here. That's why the orange box is sitting here for Google. As long as we hang out and don't fill that gap, downside potential. If we can fill the gap and get above, we now activate the upside. So these gap down here from the highs, extra layer of resistance to going higher. There's, like I said, it gets more complicated. It's not just as simple as like, here's A, here's B, here's C, make money. It gets more complicated, as you should probably realize. Very simply, you can take that roadmap pattern. Look at this. That one activated right there. Dip below, came back up through, ride it up. We're probably going to hit that 793 on Meta. Bounced off and then came up through. Then maybe retrace and push on higher. Or maybe just pop right up there, 839. Stuff happens over and over. Microsoft. Look at that. A, B, C, right down the proportions. Roadmap line. Came up above the 618 right there. Boom. That went for an extension. Went right through the 144A, right through the 1272, right up to the 1618. Beautiful. We didn't quite tag that 1618, so we might spend a little time farting around here and then go for it. Possibly even come all the way back down, retest the breakout from back here last summer. Retest that breakout before we can make that final move. May have run out of steam right there on earnings. So be careful. Twists and turns along the way. NVIDIA, another one. Big pull back, went a little deep for the roadmap line. Didn't quite hit the weekly. I think it was a 3-day. Yeah, hit the 3-day roadmap line. That's what I thought. Came up. Here's your close. Right above the 618. Oh, there's the target, 1448. Here's the 1272. That's 70% likely. Now, you may be like, well, what about this one? That one drops down to 35%. So there's a large drop-off, 35% drop-off between this line and this line. 70% likely, 35% likely. So going for big targets, sometimes you get burned more often than not because 65% of the time we don't make it that high. What's the highest probability? Coming back to the roadmap line after we hit this. Now, it still leaves 35% of the time we go higher, but 65% of the time, we're coming back down. Tesla, it's got a lot of stuff going on here. Another pattern that I don't like. I call it the watermelon seed squeeze. You ever squeeze a slimy watermelon seed squeeze between your fingers and try to do that for, target practice? Same thing on price here. we get this watermelon seed squeeze is what I call it. Like we're getting lower highs, higher lows. We're squeezing that slimy watermelon seed tighter and tighter. Does it pop? Does it drop? Or does it just shoot that way? Or does it do some other bounce off the walls and whatever? I don't know. It's unreliable. This is the most unreliable pattern that I know of in the market right there. I don't like it. Now, once it breaks out, it tends to be a big mover. Show you an example. See this one right back here? This one lasted a couple years. When we finally broke out, Costco went on a mega run. Before it hit the wall and it started bouncing around. So you got to be careful, all right? It could have easily done that and been down here farting around. Some people say they knew. I don't know. I don't know. Typically, this pattern is inside a correction. Makes it very difficult. Netflix, probably coming back to the roadmap line. No real subwaves, no real pullbacks. We're just drifting back down. Probably coming back down to test support. See over here, nice 3-wave. And shot off. Got your entry right down in there. Up to the targets. And then went for an extension. Now we're petered out, coming back down. So stuff moving. There's lots of stuff moving today. I brought 14 setups that have the roadmap pattern. Let's talk about them. Pattern 1 right here. See the move down, roadmap line, bounce, 120. That's the target. Maybe like, well, that's not much room to go to the top. Great. They're not all equal. They're not all the same opportunity. Don't trade it. You don't have to take any of them. AVGO. Or AGO, excuse me. AGO. AVGO. Very popular. AGO. This one bounced. Got the close above right there. 89. Now, coming into it, it's kind of sloppy. I'm not a big fan of taking ones that are sloppy coming into it. BG. Like I said, they're not all equal. This one busted up through. Most of the price action is below the roadmap line, though. Is it going to work? I don't know. Here's the high. Here's the low. There's the move above the 618. There's the upside, 90. Right there. Wasp friend is back. DHT. Drawn lots of fibs on this before. Got the high. Got the low. Got the close above. 12.50. Upside targets. The stop. Always $1 below the low. Down here. So this would actually be down here. Maybe like, well, that's a big stop. It's okay. You can put it wherever you want it. There's the highly likely 12.50 target right there. FLGT. Look at that beautiful move right there. Gotta talk about this. First move up, retrace, hold the 618. Uh-oh, that stopped. Absolutely beautiful correction. First move down, retrace, 618. That's what activated this. This might get continuation down. This one might fail. Even though we pushed it right up above the 618, this one right here might get continuation lower. Might not work. Now I could push on up here, hit the target, and still just be finishing up the C wave. A, B, C, and just be sloppy. Never know. That one, Y'all see that wasp? He landed right on the camera. Crazy sucker. You see him crawl across. Anyway. HIG. Another one right here. Here's the high. Here's the low. This nice uptrend might get continuation. Might end up right up here. 133. 70% likely. 75% likely. INFL. I have a tool. I have two different tools that looks for this. That one didn't actually hit, so I'm not going to talk about it. LIN. I have a different tool based in Python that uses a different mathematics to try to find these math. It's not market, it's just math. Anyway, there's the upside target, 43, right there. Right there, MEG. See, I have a tool that finds these, so we're hunting for the same pattern over and over. 2462. Sherwin-Williams. Already had this drawn. We did make a slightly lower low. That one's even slightly lower. Coming up above, setting it off. 371 upside targets. Right up here. SKT. And I'm not fond of the downtrend. You know, said it doesn't really matter, but I'm not fond of this price action that's down. That's the trend being down. Taking one of these against the trend doesn't typically work out, but that one might work out and then still go down. TNK, chopping in here. Upside 48.70. TEN. Here's your high, here's your low. Almost to the target already at 21.80. And last but not least, here's the high, here's the low. Potential right there, 30.82 on the upside. That one actually looks good for a reversal here. Maybe. Might work out. Might continue down the toilet. All right, that's the list for the day. I'm going to skip all the normal stuff. Bias. Watch out for that correction. I don't think we're done. We got some resistance above us. Probably going to flush on down. Have a great day, everybody. Be safe. The account you save may be your own.